Yeah, Friday. What's up, everybody? Friday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson, coming at you from an exotic, remote location. Not really. Taking a little spring break trip with the family, but I still have time to take a look at the markets and see what's going on. So let's go ahead and dive right in. We'll start with the big picture. So starting with the big picture, looking here at the S&P, we can see that we're up about 13 points this morning. And the Nasdaq is up 76 points this morning. So we are a bit bullish this morning, but let's take a look at that a bit deeper. So if I go back and look at what we talked about on Wednesday morning, we talked about the fact that we could have a bit of a breakdown out of this triangle into this area of demand. And it worked out like the proverbial charm, if you will. However, what that did do is after we saw that breakdown and that reversal, the reversal did take us to a new high. But yesterday we were unable to put in any new highs in our hourly chart. And by being unable to put in any new highs, we actually came down to our second demand area, which was designed for a confirmation, blew right through before we got any sort of an entry. And now we're sitting at a line that could be considered a decent area of support. Now, when you're sitting at a support level like this, but unable to bounce off of it, that typically is going to be a bit of a bearish signal. And when I look at what's happened for the week, we started the week here. Let's go right to our Sunday opening market. We started the week here, and now we're down just a few points. So for the week, we've actually been flat to down, even though this morning we're up a bit. So something tells me that we may get a bit of a sell-off today below 3,900. Now, if we do, you've got a little bit of a demand here at 38.77 where we could slow down for a target. But if we get basing here at 3,900, look for a potential breakdown below that level. And our big picture in our 4-hour trend is also telling us that we are showing some signs of weakness. Now, by the way, it doesn't by any stretch means that we're over, because we're still, less than 60 points off the all-time high. So we don't tug on Superman's cape, we don't spit into the wind, and we don't short the all-time high. But I'm also not afraid to take a breakout if one is set up. Now, that's on the S&P. Let's look at the Nasdaq. The Nasdaq's actually significantly weaker than the S&P. The Nasdaq is not near its all-time high. We are a bit lower. And so since the Nasdaq is a bit lower, we would look for we got our reversal off the Wednesday level that we talked about. We did have a supply level up here that would have made a nice target and also a potential short since we were in a downtrend still, and it blew right through. So now what am I looking at in the Nasdaq? Well, look at the same picture. If I zoom out of here a little bit, we're going to be able to see it much more clearly. This sets up, we've already had two clean touches for a potential breakdown below this area, touch number 1, touch number 2, and then over here it acted as a resistance line. So we're looking here at about 12.7, 12,705 is actually where our line is drawn. But I think that could be an area where we might want to be very considerate of a breakdown. Now, we could theoretically, if we zoom in on this a little bit, we could theoretically say that we've already started the reversal back down to that level. And if you want to look at a 15-minute chart, you have a pivot up here that's a really nice pivot that we were unable to make it back to. So, the fact that we were unable to make it back to that pivot actually is another sign of continued weakness. So I think that we've got the shadow of the bear looming over us in tech. It's interesting how some of our other markets are continuing to rally. Let me just look at all the equities here real quick. Some of our other markets are rallying. Like the Dow Jones is just off its all-time high. The Russell has certainly started to give us another bit of a move down after breaking out to the new all-time high. And so I think that we're at a bit of a shadow of a bear, where a bear feels like it could be looming. Now, by the way, it doesn't mean by any stretch that it's here. What it means is that we need to be cautious. Here's the analogy I use. If you see clouds on the horizon, bring an umbrella. Doesn't mean it's going to rain. And that's kind of what's happening here, is that we're seeing weakness, and that weakness is partially undermined by the fact that the tech companies just can't seem to get out of their own way, right? You get a stock like Apple, and Apple is down pretty significantly off of its highs. right? In our live trade room last week, we talked about doing some sort of a breakout for free trade by acquiring Apple at 100, and that it might just get there on its own. We looked at a stock like Tesla, which is off of its highs, significantly off its highs. We looked at Microsoft, which is it's off its highs. But definitely even on the way up, you can see here that the momentum on Microsoft was not as big as some of the other technology companies. You look at a stock like Netflix, and Netflix also pretty far off the highs. And so as we start to see some of these technology names, Amazon being down a fair amount, these technology names are definitely seeing that that maybe some of the institutional investors are rolling out of some of these technology positions. And maybe it's not necessarily rolling out, maybe it's just lightening the size of their overall exposure because the run has definitely come to a close. Right now, you juxtapose that with stocks like Goldman Sachs, and with a stock like Goldman Sachs, it's rallying up to nearly brand new highs. And so financials, Goldman Sachs, Morgan Stanley. The other day, one of them we looked at here in the daily market commentary was PNC. And so as some of these stocks continue to rally, we're seeing that financials, XLF is continuing to move higher, while technology, XLK, has begun to move lower. Maybe we're seeing a bit of a rotation out of some of the technology stocks and into some of the others. But that leads us to our next market, which is crude oil. So looking at crude oil took a tumble yesterday on our contract rollover day as we really sold off. Now, I will tell you, my belief was that crude oil was going to make it to 70 potentially by the end of the month, and that momentum completely stalled off. But we did have a nice reversal come back down off of that level. So if you're able to catch that reversal, do me a favor, leave a comment down below. Love to hear what you guys are doing about these big moves when they do show up. We are getting some decent moves this week. Looking at this on a 4-hour chart, in our 4-hour trend, we've put in a lower low as well as a lower high. So shorting does make sense at this point because we put in both a lower low as well as a lower high. And the next area where I would look would be, are we going to get a reversal off of this hourly supply? Now, if we make it up to this hourly supply, we'll have put in the new pivot high. So I don't know that we'll make it up to this hourly supply. And if we do, that pivot high was really, really close to it. So in reality, the better one that I see is this little itty bitty wick over wick right up here below the pivot high. And when I look at the 15-minute, you might actually get a bit of an entry off of here if we retest this high. So those of you that are looking for a short-term day trade, you've got this area right here. And if you're looking for a little bit longer of an opportunity, look to the area that's up a bit higher. Okay. And then last is gold. And I will tell you, with gold, looking at this chart, anybody who looks at this chart should have the same opinion. And that opinion should be, let's remove all of our lines that are going around here. Oops. There you go. Remove all of these lines and just allow price to break. We've had 2 possible breakouts. Neither one of them gave us any basing because we're always just basing if it's in beside a bigger zone. And so what this tells me is that I'm going to be a bit more cautious on any level that I take because we're just chopping sideways. And if I force a trade, I'm going to wind up hurting myself. So looking at this on an hourly chart, we've moved this to a confirmation entry because it already got one good touch. Beyond that, there's really not a lot of great levels for us to lean on. And so we're going to let gold just kind of go by the wayside today without setting up any trades on it. So let's take a look at speaking of technology, let's take a look at our stock of the day. So our stock of the day today is PayPal. And with PayPal, what we're going to be able to do, what we're going to look for is the fact that we've put in lower swing lows and lower swing highs. And the lower swing lows and the lower swing highs that we see here in PayPal have shown me that I think we have a chance to continue to come down. Now, looking at this on the daily time period, yesterday we closed on the low. This morning, it looks like we're going to open up just a bit higher, but closing on the low is always a sign of weakness. And the fact that we closed on the low means that we're going to look to see where's an opportunity to get back in on the short side. And in looking at this on the hourly chart, we have a really nice wick over wick level right here. And let's see if we get an entry back to this wick over wick level today off of this hourly chart for those of you that day trade. And it may not be as long-term of a swing trade, but it might give you a decent entry today where, prices could jump in here. Now, we're trading up right near that range this morning. And if we open higher than that, then potentially you could even look for the gap fill level and see if we get something off of the gap fill level up in here. But all in all, I'm going with the general trend direction. The general trend direction is still overall down, and it looks to be that we're rolling over. Basing here in front of 225 would be another great entry if we get basing here in front of this level for price to drop, and I think that a decent price target is 195. Now, earnings aren't until April 28th, so you have plenty of time before earnings happen. But remember, we're heading into a weekend. So remember, anytime you're going into a weekend with your futures positions, make sure that you're protecting yourself against gaps. If you guys have any questions, send me an email, chuck.fulkerson@tradersarmy.com. Until Monday, everybody, have a great day. See you.
Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.